It reminds me of that. What was the name of the guy, the president of American Heritage, who came and talked to us at the Philadelphia conference? Uh,
Oh my gosh. Oh, he was wonderful. What was his name? I don't know, but he brought his dog every time he came.
he brought his dog. Yeah,
Oh my
yeah.
gosh, what was his name? He
I
is
could
he's Nick Moelli's idol. Like,
really.
yeah, that's who he wants to be. He wants to be him someday. Yeah.
Okay. Well, I tell this story all the time where he came in and introduced himself and the credit union and kind of welcomed everybody on that first day. And then he kind of told the story about how his credit union started as like a $20 million credit union and then evolved into a $4 billion credit union. And then everybody at the in the conference was like, we have to have him back to tell us how he did that, you know? And so we got in touch with his secretary and then invited him back the next day. And we just posed the question to him, like, what's your story? What was the journey for your credit union? And the first thing he said was, well, I just merged in a bunch of small credit unions.
Yep.
And it was
Yeah.
like, oh my God, that was not exactly what we wanted
No,
to
we
hear.
weren't so idolizing at that point.
I'm happy to introduce Lori Herrick, the president and CEO of Manchester Municipal Federal Credit Union in Manchester, Connecticut. Y'all are a $37 million credit union, right?
Yep, we keep on waving between 36 and 37. Yep.
Okay, so you're probably aware of this. I used to do a presentation to the DE program where I would talk about your credit union and about the student loan program in particular because it's such an amazing program, and we'll talk about that in a second. But I used to share that you were a $28 million credit union, and this was only like 6 years ago that I used to do that presentation regularly. So you've grown a lot over the last 6 years or so. What's going on? How come your assets have gone up so much?
It's funny, but I feel like since the day I took over, that's exactly how it's been. We've always just grown. When I remember when COVID started, it was 2020, and we were having our March annual meeting, and it was our 60th anniversary. And I made this beautiful sign, and I put that we were 25 million in assets, and
Yeah,
and then, now we're 30, it seems like every time I blink my eye, it's another million, which is great. But I think the secret sauce to this credit union is, always has been, our employees. We have wonderful employees. I got a great board, dedication and service to our members. There's not anybody that doesn't say, in this town of Manchester that we're for the town of Manchester municipal employees. Oh my God, go over there. They're the greatest, customer service. They'll take care of you. They'll take care of you. And we do. We just, it's like a ginormous family here. But I think that's a secret sauce. I really do. It's just how we take care of them. Whenever we're bringing a product or whenever we're doing anything, we always think about the member and the credit union. It's just not, oh, this is going to make the credit union some money. We're always thinking, this is going to benefit these members like tremendously. So I think
yeah.
that's, yeah.
Yeah, I call it the Lori Herrick effect, to be honest, right? I mean, I think that you've always had that philosophy. And this is what I used to say at the DE class. I would sort of set up the student loans as you figured out that that was a product that you needed to offer because it's something that your members were asking for. And so you've always had that mentality of how do we serve the members best? And, like the first step is just asking them what they need. What are the products and services that they're looking for? And provide those things. I mean, it sounds so simple, but it's so powerful. And I think the results speak for themselves because, as you mentioned, since you've been at the credit union, it's just grown and grown and grown. So that's something to be very proud of for sure. So introducing you as the president and CEO of the credit union, you have some other bona fides as well. You were a former chair of the CUNA Small Credit Union Committee, now the America Small Credit Union Committee. And currently, you serve as a board member for America's Credit Unions, which is really exciting. So talk a little bit about your experience on the board, and I know that GAC is coming up, and I'm really excited to see you in person. What's going on there related to advocacy and some of the work that the board is doing.
So, I mean, as you well know, America's credit unions is, advocacy is number one top priority. That's what we're there for. And the tax status is also number one on the agenda to make sure that we stay with our tax exempt status.
Mhm.
So that definitely is very big, what we're talking about all the time. But, the other thing too with this is, we're just a year, just past the year mark of merging these two organizations and coming out America's credit unions. And I think that it's going wonderful. I really do. Love the people that are in place. And it seemed like it was going to be hard at the time, shrinking the board size and merging, the two boards and all
Mhm.
the employees. But it seems to have worked pretty well. I mean, it really does. I think the board that's in place right now is first and foremost, we're not us and them, or we're America's credit unions. We're one board and definitely focused on doing the right thing for credit unions.
Yeah. Yeah, absolutely. And one of my favorite things, having experience working for CUNA for a long time, like my favorite time of year, it was definitely GAC time. I mean, it was so much work, and I feel for all the America's Credit Union's employees who are working their butts off right now, getting ready for that conference. And so it is kind of chaos and madness, basically all year, because I think, the big joke, when GAC ends every year is that it's the first day of planning for the next GAC. But it's also just a really fun event to see come together and also just to be a part of, because you get to see all these people that you haven't seen for a long time, all your credit union friends, and it's like this big sort of celebration of the credit union industry. And so, for this year, I'll be attending in a different way than I have in the past. Obviously, previously I used to help put on the event, and now, more of an attendee. But I'm still really looking forward to it. I mean, advocacy is still so important. We think about the tax status as being, very important. I was doing a little bit of like number crunching on if credit unions were taxed, what would that mean for bottom lines? And it kind of depends on the tax rate and kind of how it would all shake out. But it's essentially like a 30%, if not more, loss. That's what it would be on your income. And that's huge. I mean, imagine, how tight things already are, especially for small credit unions. And then just saying, okay, now lop another third of your income off the top, right? So that is really scary. And so I am glad that America's Credit Unions is taking it seriously and working hard to ensure that lawmakers and the administration understand the importance of that not-for-profit tax status. So thanks for your service and work. Is there anything that you're looking forward to at GAC? Any events or what's
I'm
your
looking forward to a lot. I mean,
Mhm.
number one, the board goes in a day early because we have our board meeting. So that's always, a really good day. It's a whole day, which is really interesting, but we really do get a lot done. So that's how my GAC is going to start, with some committee meetings and with a board meeting, and then the GAC starts. But I am looking so forward to seeing so many people and attending events. I can't wait to see my CULA friends. Really excited to see them and just everything. I mean, when I look at my schedule, I try to figure out how many events I can get to or how many, classes I can attend and how many I try to get to as many as I can, believe it or not, the
Mhm.
vendors, because I really feel that, we owe them a lot. They're there for a great reason. So we always make a list of what we're looking for, and then I try to go find those vendors and things like that. So when I come home, I'm exhausted because I have actually like run all day, just keep on going because I want to get it all. I want to try to do it all. Sometimes I need to remind myself I can't do it all, but I try.
Yeah. Yeah, it's a whirlwind for sure. But it's definitely worthwhile. I mean, the amount of things that you get to learn and the business partners that you get to meet, it's just really wonderful. And so I am looking forward to seeing some old friends, both at, the former company, but also, credit union peeps as well. You included, of course, Lori, my credit union bestie. So,
Absolutely. Yep. I can't wait
um,
to see you.
yeah, it's going to be a fun time. We talked a little bit before the call about the small credit union committee and some of the work that we used to do in advocacy, both at GAC and just kind of throughout the year. And I know one story we wanted to talk about a little bit was the Cecil story and how the small credit union committee really, went to bat for small credit unions across the country and worked hand in hand with the NCUA to develop a resource, the free Cecil worksheet that the NCUA made available at our strong requesting and urging. That it's a long story, but I'm just wondering if you, from your perspective, if you can kind of share how it went in your eyes, and also now that worksheet is available, kind of what it means for you and for small credit unions nationwide.
So I can remember in the beginning when this Cecil, information came out, this was what was going to happen. And people, smaller credit unions, especially really small credit unions that might have just had a person or two in their shop saying, I'm merging. I can't do this. I don't have the money to do this. I don't have the expertise to do this. And we were kind
Yeah,
of taken back by that. We were thinking, this is kind of crazy. What are you talking about? But
yeah,
we
yeah,
got into it, and I mean, there were some wonderful people on the small credit union committee who shared, spreadsheets that they had developed. And I mean, and it was amazing. And we sat through many webinars going through them. And let me tell you,
Mhm.
the more
Yeah,
webinars I sat through, the worse I felt about it because I thought, oh my gosh, like this is huge. This is going to take so much time. And
Mhm.
then, of course, the vendors started coming around
Oh
and
yeah,
started, saying things like, Cecil's coming, are you ready? Doom and gloom, what was going to happen to us if we didn't adopt the Cecil and start using Cecil. And then small credit unions, a lot of them just started going with the vendors thinking, I can't do this. Oh my gosh, you're right, I can't. And
yep,
I thought, there's no way I'm paying a vendor to do something that I know that I can do. But it's gotta be close to as easy as, the old way, the allowance for loan and the lease loss was. And
right,
we went to NCA and we told them, this is crazy. Small credit unions are merging. They're scared. They're being, spending tens of thousands of dollars a year having vendors do this. And then they agreed to help us, which was just amazing. I still thank them when I see them
yeah,
in meetings. I will thank them for the Cecil tool that they provided because I know that they took a lot of time and a lot of money to develop that tool for us. Uh,
yes, yes,
and I love it. I mean, I use it religiously. I tell people that had already signed with vendors, I said, great, well, when your year's up, you need to go over to this free tool because you're crazy to spend that. And like I said, I thank them every time I see them because I think it was a huge deal that they did this for us. And if it wasn't for the small credit union committee, going to them and telling them this, it would have never happened. So I really think that we have advocated for small credit unions, not
yeah.
just for that, but in a huge way.
Oh yeah, yeah, for sure. Yeah, I mean, I think I started in the small credit union role in 2017, I think it was. And it was the first thing on my to-do list, because it was what credit unions were asking for. They were looking for support on how to meet this new accounting standard. And similar to the credit union experience, we got a lot of phone calls and emails and requests from vendors to say, form a partnership with us, and then we'll provide the CECL, as at a reduced rate for small credit unions across the country. And we're like, well, is your reduced rate zero? Is it free? Because otherwise we're not interested, because that's what they've been paying to do this work before, right? They're not, I know that credit unions use ALM companies, and they can outsource accounting and a lot of that stuff. But for the majority of credit unions just did that work by themselves. And so, yeah, I mean, the committee from the very first time that we met with the NCUA, when I was, part of the committee, was the first thing that they talked to, um, the board members about. And I will give Todd Harper like some extra credit because I think that he really understood, because the committee did such a great job explaining it to him. But he really did understand, how existential this was. Like I remember, just like you sitting through that webinar with Steven Nelson from the Utah League, and he's like, he went through his presentation, kind of explains how you could do it, by yourself. And like the first response from one of the credit unions was like, okay, I guess I'm just gonna have to merge, just like you were saying. And it's like, man, credit unions, small credit unions in particular, are already overregulated and compliance burden is already so expensive. And here we have this new thing that's going to take hundreds of hours to complete. What can we possibly do? And it really was the NCUA who understood, what the challenge was and put resources, like you were saying, to actually building something out. The chief accountant over there, the original one who stepped down kind of in the middle of the process. I don't remember her name, but she was a huge advocate for it. And they made it happen. And now from what I understand, like, most credit unions use it. I know our credit union uses it. At Madison Credit Union too. And it's just a great success story for the committee. And I think it is, like you were saying, like a great example of a lot of the work that the committee did over the years and
Yeah.
continues to do. I'm hopeful that they're meeting with the NCUA this year. I haven't talked to Rich about it. And I'm curious to know how their committee meeting goes at GAC. It's hard not to be there. Like I was thinking about it today. I'm like, should I go? Should I show up? No. I want to let Rich, run the show and not feel like, I'm sort of looking over his shoulder. Not that he would care. I'm sure he would be fine, but that's just how I feel about it.
That's how
Eh,
you feel. I know he thinks the world of you and, and would love to have you anywhere that you want to be because, I know he started with your playbook and, and now he's writing his own, but, just
yeah.
continuing on. So,
Yeah. Yeah. I mean, I probably won't show up to the committee. And actually, I'm going to go to the underground, which is the first time I'll be able to attend that event, and that'll be interesting. I know they're coming out with sort of a kind of a back office solution, that's sort of like helping credit unions collaborate their back office work. I'm curious to see what that looks like. I think they have some sort of proof of concept that they're going to present. So it'll allow me to attend that event. But after that, I will attend the Small Credit Union Roundtable. I will stand in the back and hide and maybe wear a disguise. But I definitely want to be there in support of all my friends and of Rich, of course, and the committee. And just continue to learn, I mean, I think that's one thing that I'm sort of looking forward to is kind of blending in a little bit and sort of just hearing and listening more than talking and facilitating. Like that's always a challenge when you're the facilitator of that event is like you're so focused on the attendee experience and just making sure that everything is running smoothly that you're not like truly absorbing the great ideas and wisdom that credit unions are sharing during the roundtable. And so I'm looking forward to this new perspective of attending that event. So
yeah.
hopefully you'll be there. You'll be there, right?
Oh, I'll be there. Are you kidding? Yeah,
Yeah.
it's my number one thing that I can't wait to go to every year. I can't,
Mm.
I love that. And usually it's packed, sold out, can't get in. But yeah, I really think it's wonderful. I think we've done a lot of things for small credit unions over the year. And I can remember my first few years on it and seeing the people like in the audience, and now a lot of those people are on that committee.
Yeah.
And which I think is wonderful because, they went to the roundtable and decided, I want to get involved in this. And they have, and I just think that's great. With Todd Harper, what like you had said, one of the things that he did, I was at a meeting, and he was doing a webinar, and I was telling him about Cecil, and I said, we have to do something. And I said, every day we're getting our phones, our emails are inundated with these vendors, just like doom and gloom. And he wrote the word vultures on a white piece of paper and held it up to me. And he goes,
Mm, mm,
don't
mhm,
do it.
mhm.
And I'm like, no, I'm not going to do it. I said, but a lot of people are afraid, and they are. We can't afford that. I mean, we really can't. Um,
Yeah, yeah,
and even like
totally.
you talked about the tax status, right? You're saying 30%. Well, that's one of our employees. So, we're gonna have to get rid of an employee type of thing, or we can't hire a new employee. I mean, it's huge. It is really huge for small credit unions.
Yeah. Yeah, I mean, what I really love about that Cecil story is like when you're doing advocacy, and when you're doing sort of the work that we did at the National Association, like you know that you're making a difference in an like intangible way, Like I mean, yeah, not to like rehash the work that we did at, for small credit unions, but like you feel it. Like people will say you're doing a great job, and we love the webinars and the conferences and all that stuff, but like it's hard to put a number on like the impact that you're making. But with Cecil, like you can put a dollar figure on that.
Yeah.
Like what kind of money you're saving credit unions by providing this free solution. And so it was always nice to kind of have that feather in our cap to say, this is like a concrete win that
Yeah.
is making a very tangible difference in the lives of small credit unions and allowing them to better serve their members because of it. And so, it's a great story and a testament to advocacy overall, not just for small credit unions, but for the whole industry itself, is like you can make a difference by being there in DC or, inviting your members of Congress to your credit union when they're home in their districts, or hike the hill visits, put on by the state leagues, like, those things absolutely make a difference. And so be active, because, it will help.
I agree 100%. And the funny part is, I was so active in Connecticut. This was my little bubble. I felt I've been on the Hartford chapter for almost my entire time here.
Mhm.
And, always, doing something for small credit unions and collaboration and trying to get, us together. And that's where Jill Nowacki, who was the CEO at the time, um, recommended me to the small credit union committee because she was like, oh my gosh, you're running. And it opened my eyes. I really had no idea that I could be on a national committee and, and have some type of an impact. But I really do feel that I have. I mean, I know if you asked anybody on the board or anybody, do you know Lori Herrick? They would say something like, oh, the small credit union representative? Oh yeah, yep, we know her. Because and that's how I want to be known. I don't want to be known yeah, I'm the small credit union representative on
Yeah.
the board, and that's how I want to be known. Yep. And every time we're in a meeting or anything, and I'll always be like, we got to remember small credit unions. That might be really hard for them to do. Oh, and now out of their mouth will come, and small credit unions will be able to, because I just have talked about small credit unions so much that they really do kind of, I feel like if they're gonna think about something, they're gonna think about how does a small credit union fit in here too, because it's gonna be the first thing out of my mouth. So,
Yeah. Yeah. Well, all of us in small credit union land who believe in small credit unions and, know how important they are to their communities and their members really appreciate that, Lori. I know you take a lot of time out of your work life and your personal life to volunteer, to serve on that board, and there's travel involved and long meetings, and I think you're on subcommittees and all that stuff. And so I know it's a lot. So, on behalf of, the rest of small credit unions across the country, we thank you for your service
you're
and,
welcome.
and your constant advocacy for sure.
I'm definitely, it's a pleasure. It's my pleasure that I'm able to. I mean, I can't believe that I am actually, when I was rolling off that small credit union committee, and then to think that I was gonna end up on the CUNA board, now on America's Credit Unions board. I mean, it kind of blows my mind when I think about it, because what? Are you kidding me? But I am so happy that I am here. And I really do feel that I've got that voice for small credit unions in everybody's ear all the time. So
Yeah. Yeah. Well, it worked out really nicely. I mean, I remember being on the phone with you, like at the end of a credit union's term, or a member of the committee's term for the small credit union committee. I'll call up, the person who's rolling off, and I'll say, thanks for serving. Like, it was a pleasure having you, and just sort of do like a little bit of an exit interview in a way. And, calling you and having that conversation was, especially bittersweet because you had been on the committee forever. And, you and I had become close friends, and we share our birthday, and everything. And it was just really sad to think that you wouldn't be on the committee anymore. And we're like, well, how can we keep you engaged, right? How do we keep you involved? And I'm like, well, you should serve on the board, right? Like you should serve on the board. And we looked up that phone call. We went online and we're like, okay, what are the terms? What seats are open? And like that that seat, your seat that you were representing was open.
Was
It was like
open.
the one opening.
Somebody had vacated it because they had to, and it was open. And yeah, and it was up for election. And that was probably within a month of me rolling off the small credit union committee
Yes.
and
Yeah.
running for that seat on the board.
It was perfect timing. I feel like we should advocate for something in the bylaws that says if you serve as the chair of the small credit union committee, you should like automatically get a role on the board
Oh, I
afterward.
like that. I like it a
Yeah.
lot. I like it a lot. Yeah, because I miss a lot of the people on the small credit union committee, and I think that they've done an amazing job, and I can't wait to see the next thing that they're working on, and and what comes out of it, because I always feel that every year something comes out of that committee that really makes a difference in small credit unions' lives.
Yeah. Yeah, I do know. I don't know if I should tell, but I do know the resource that they're going to be unveiling at the roundtable. I have heard a rumor of what it is. Have you heard of it? Do you know what it is?
Is it something that we worked on in the past as well?
No, this is pretty
Oh,
new. It's pretty
okay.
new, I think.
Okay, so I do, because there was a couple of items that I heard about, and there were things that were worked on before. That I think it's gonna always be worked on, succession planning, right? That's something that's
Yep.
always gonna be worked on, always needed. But yeah, I think I might know then what you're talking about, but maybe it's a secret. I,
Yeah.
I don't know.
Maybe the plan should be I'll have Rich on the podcast after the roundtable, after GAC, so I can let him kind of explain everything.
Oh, that would
So
be great.
we'll just use this as a little teaser, is that there's a new resource coming from America's credit unions that will be helpful to small credit unions. Stay tuned after GAC to hear what it is.
Yes, I love it. I love it.
Okay, so the other thing that I want to talk about is the student loan program that you're kind of famous for in the credit union space. Speaking of GAC at the Small Credit Union Roundtable, I think you've presented on it on a few occasions, and we've done a webinar on it in the past. And it's definitely kind of a one of a kind program. I would say doing student loans in-house is not that common. Can you tell, for anyone who hasn't heard you talk about that program before, can you tell us just a high level overview of how the program works? And then tell us how it's going, and if there's any evolution happening to that program moving forward.
Okay. And I like how you said high level, because you know how I could really get into the weeds of talking about it, because I love it so much. But and as you had said, how we do things here at the credit union for our members, we had members coming in trying to take out home equity loans or personal loans, send their kids to college. And our personal loans didn't go up that high, and a lot of times they didn't have the equity in their homes or whatever. And so we finally decided, let's look at doing student loans. Our members need it, they really do. So we did, and at first we partnered with a vendor for a very short time, because they decided after a year they were going to exit the student loan. So we just decided to take it in-house and do it ourselves. So at first we were just doing in-school student loans. So we also called our attorney and said, talk us out of this. Should we not do this? And he looked into bankruptcy laws and everything to do with student loans and said, you should do it. You should really do it.
Yeah.
And so we went forward. So we started with, $20,000 a year, and this was, 2010. So, it's a long time ago. So, that was a
Yeah.
pretty nice amount of money, which college might have cost back then.
Yeah. Right.
$20,000 a year. And, we pay the school directly, we work with the school directly. And so all this means that bankruptcy is not, you cannot call, it's not included in bankruptcy because it's a true student loan. We put it on our books as a student loan. We report them to NCUA as a student loan, a non-government student loan. We pay the school directly. And we don't pay for, we don't, oh, let's throw a couple extra $1,000 in for books. The school says what's tuition and what's housing. That's what and we pay that.
Yep.
So we did that for the first 4 years or so. And then every time somebody was coming in to get a loan for an auto or whatever, they had 8 different, student loans on their credit report. And so we started looking into, refinancing these into one particular loan with one interest rate. And it would be, immediate repayment. And we always do immediate repayment on every single loan. And that's why we've never had a delinquency and we've never had a charge off, because it's top of mind. They know this is a monthly loan that they have to pay. And if
Right.
you're going to send your kid to school and you're going to borrow $20,000, our maximum term is 15 years, that might be $150 a month that you're paying.
Hmm.
Any parent is going to say, I can do that. I can
Right.
pay it, I can do it. And a lot of parents do it. And then when their kids graduate, they tell them, or we tell them too, this is your debt. This is going to
Yeah.
be your loan when you graduate and you're on your own and you're getting a job. And so they know. They come in, the kids sometimes are working during the summer, the parents make them come in, you will pay your student loan this month, and they come in and they pay their student loan. So it just took off like tremendously.
Mm.
People, all these loans now that are student loans, the students now are our members who have credit cards and car loans and their checking account, and everything is here because we're
Yeah.
what they know. We're who they know. We,
Right.
started here when they were 18 years old with a student loan. Um, so it's going fantastic. We have about a $2.1 million student loan portfolio currently.
Sure.
We have about 21 million in loans. So, and those people, they have their accounts, they have their direct deposits. Like I said, we've never had a delinquency, we've never had a charge off. They know from day one, this is your loan, this is what it's going to be. But as people that did consolidated loans would come in here, they would say to us, we've been paying for 4 years, 5 years, we've never made a dent. They're still paying the accrued interest on the loan.
Right.
And
Yeah.
haven't even touched the principal. So as soon as we consolidate, and they start paying principal and interest, they're watching their balances go down, and they are just, they're just so grateful. And the first one we did, I'll never forget it. It was a $39,000 loan consolidation. He had 6 different loans on there. He came in to get
Yeah.
an auto loan. We consolidated it and we did a great rate. We did 3.5% for like 10 years. It was like $230. And he said, well, I was only paying like 85 for the 6 different tiny little fees. And I said, yeah, but it was for 300 months. So if you continue to do that, he was going to pay the 39,000 plus, I think it was 41,000 in interest over that 30-year
Right.
term if he
Right. Yeah.
continued to do that. And ours was, like $8,000 or something in interest, and it was going to be paid off within 10 years.
Yeah.
He almost fell off his chair, and his father saying, oh my gosh, like we would have never ever thought. So we know that we're doing the right thing for them.
Mm.
And they, like I said, they're our members now. We're bringing the age demographic down in our credit union. And we love student loans. As a matter of fact, over the last month, I've probably had 4 people reach out to me for my policies, for all the different things that I've had. I've set up many webinars with people and talked them through, how to do this. And so my goal and my hope always was that credit unions all across this country would offer student loans to their members.
Yeah. Yeah. I think one of the keys definitely is like the non-deferrals, right? I mean, so if you know how federal student loans work, you don't pay on them until after you graduate, but that doesn't mean the interest doesn't accrue, right? And so you're accruing interest on these massive student loans that you're not paying on for 4 years, and then surprise, you graduate, and here's this massive amount that you have to pay. That's already accrued massive amounts of interest that also carries high interest, and just puts you in this huge hole, right off the bat. Whereas your loans are non-deferred, and so they're paying them right off the bat, and so they're actually making a dent, and after 4 years, they're in a far, far better position and in far better shape than they were, or that they would have been had they gone the federal student loan route. And I think that's really awesome. That's really
Yeah.
fantastic.
And
Yeah.
and I really think that that is the whole key to this program. And like I said, any parent that, let's say, and you haven't had a chance to save for your child to go to college. Maybe your family never went to college and this child's going to be the first one. You just never really knew. Um, let me tell you, they're going to pay that $150 a month so that kid can go to college and be grateful that they were able to send their kid to college. It's just been life-changing for a lot of people, because they could, or maybe they would have been able to get the student loan from the government, but their $20,000 by the time they graduated, is $25,000. That's where they're going to start, because of that $5,000 in accrued interest, and then, that's going to take 4 or 5 years before you even touch the 20. It's just a nightmare. It really is. And
Yeah.
I do have that little video series.
Oh,
Do
yeah.
you remember
Yeah.
the
Yeah.
video
Like,
series?
yes.
So that is free, and I send them to people all the time. I'm like, oh, here, look at this. Use these in your financial education for your members, because it's all about that. It's all about, they get a government loan, and that's all I have to do. I just sign my name here, and then the second year, what, really? It's that easy? And the third year and the fourth year, and then 6 months later, they're opening up, mail, and they've got all these bills, and they're thinking, what, how do I owe that? But I also have members that have said that a million times and come in
Mm.
and said, oh my gosh, I had no idea what I owed. I had no idea, because they never looked. They didn't want to look. Who want, and
Right.
yeah. So that little video series, though, it really is a great little snapshot into what happens um, to the everyday person that just signs on the dotted line and goes ahead and gets that government
Yeah.
loan.
Yeah, I mean, it's such an amazing service. And on top of that, it's targeting a demographic that you really need to start making inroads with, right? I mean, for smaller credit unions, for all credit unions, we're all sort of trying to compete for that younger member before they enter those prime borrowing years of buying cars, buying homes, and so on. And so if you can establish that relationship through a student loan and get in there before those times arise, like that's a really big advantage that you can have. And so from that standpoint, it makes all the sense in the world to try to make these work. I will share that when I've sort of presented on this on your behalf at different events, or just spoke about it, in passing with credit unions, is like, what are some of we get questions about the risks, right? Like, what are some of the risks of doing these? The other thing is, I don't think it's as big of an issue with the current administration, but the previous administration had made a lot of promises around canceling of student loans. And I know those are federal, so those wouldn't affect you, but it would affect the market in a way, right? And so just curious to know your thoughts about some of the risks that you've heard and that steps you've taken to kind of mitigate the risk, and also what your thoughts are about, the potential for federal debt to be canceled. Because, if like imagine a member came in and they consolidated, $100,000 in federal debt into your program. And then like 3 days later, the federal government said, we're canceling all that debt, right? Like, I mean, I don't know if that scenario has played out in your mind, but just curious to know your thoughts on all of that kind of dynamic.
So, I mean, I've heard, it was funny because like some of the largest credit unions in Connecticut, when I first started this, would say, oh, that's the next big bubble, like after the housing crisis. And, they still say that, and risk, but every single loan that we do is a risk. You're taking a risk, giving somebody a loan. Doesn't, but with these particular loans, they are not dischargeable in bankruptcy. So you're going to get paid whether they file bankruptcy or not, because it's something that they're going to have to do. So the risk is a little bit lower than like a personal loan for sure, a credit card for sure.
Yeah.
Even like an auto loan. So you might, especially the way auto loans have been, you know, the amount, the price of an auto loan right now, just ballooned. And so is
Right.
that car right now going to be worth, what you gave them for a loan 3 years ago? Probably not.
Mhm.
So there's risk with everything, but I feel like, and we feel like that we took a risk on a young person to get them an education. And, we also sit down with every single one of them beforehand and say, this is your debt. This is what you're going to owe. So if you're not, if you, if this really isn't something that you want to do, like we had somebody, we've had a couple of different people come in and say, oh, well, my son wants to go play soccer at the $60,000 school. And we were like, well, you're crazy to saddle them with $240,000 debt. We wouldn't give you that.
Yeah,
We'd give you 25 per year.
sure.
So we'd give you 100. But you're crazy to saddle your kid with $240,000 worth of debt. So you should rethink that. And, the two people that we said that to, they actually did go to that school and within the first semester transferred to a different school and
Mm,
realized it wasn't for them. And it was just way too much because they went and got a loan for the government from the government for the rest.
yeah.
So, we look at it like every single loan we do is risky, but we also look at it that we're taking these young folks and we're saying, we're going to get you an education, which is going to then hopefully lend you to a really great job. You're going to have no problem paying this back. And, you're going to be able to go on with your life. We have had people that have come in and said, I'm going to school. I'm going to be a teacher. I'm going to teach in the inner city because I want to have student loan forgiveness.
Mm,
You should go directly to the government because that's the only way you're going to get this loan forgiven. If you come to
right.
us, you're paying back every cent of it. So go to the government because there's certain criteria for teaching. We had one member that actually has been in the inner city teaching for the last 9 years, knowing that when he hit his 10 years, he had to pay, the government loans, but once
Yep.
he hit that 10 years, the rest of his loan was going to be forgiven. So we talked to people about that. What are you going to do?
Mm,
And, we've had nursing that we've said the same thing to nurses. You ought to look and see if this is anything that, could possibly be forgiven. If it could, you should go with the government loan because that's the only way it's going to be forgiven.
yeah.
So, I mean, we're not saying, oh, we're going to take everything and we'll just take it. If it's going to be better for them to go the other route, oh, we say, please go the other route because then your loan's going to be forgiven. If you come here, every cent is going to be repaid. When we buy the government loans, and that's why we have to buy them directly and pay the government directly, the bankruptcy protection follows the loan.
Mm,
So when you first take it out with the government, it's they can't, you can't declare bankruptcy on that. When we buy it and buy it from the government, the bankruptcy protection follows it.
okay.
So so that's how, we've been able to consolidate, but we do, like I said, and there haven't been many, but there's been a few that have told us right up front, well, we're gonna do this because we're gonna pay on it for 10 years and then, we know that the balance is still gonna be huge and we want it to be forgiven. We don't go that way.
Yeah. Yeah. I mean, I love that. I mean, it's such a great example of how, your approach to serving your members has been effective, right? I mean, you really just take into account everything. You don't just look at them as, the same member, with the same situation. You talk to them and you figure out what their goals are. And then you figure out what the right approach is and right direction is for them, for their personal situations. So it's just great to hear your story like again and just a great reminder of the consultative approach that small credit unions take with their members. I mean it's just amazing. So I really appreciate it. And Lori, I'm really excited to see you in 2 weeks,
Oh,
right?
I know.
Is it
I
less?
go Friday, the 28th, so
Yeah. Okay.
yeah,
So a week from Friday.
a week from
They're heading
Friday.
over there, and I'll be there on Saturday. So let's meet up and have a beverage or some food and catch up
Well,
for sure.
we usually meet, you and I, at the advocacy meeting on Saturday, right?
Yeah, so my flight gets in a little later. I get in
Okay.
at like 2 or 3 maybe, so I would be late to it. But I was gonna look to see if I could change my flight. So I'm going to look to see if I can get out a little bit earlier and catch that meeting because I do love the advocacy committee meeting. It's really great to hear what's going on at a high level, for the industry's advocacy strategy for that week, of course, but also just for the year. And there's always a lot of fun people at that meeting. So
And
I'll try to get there. I'll try to get
there
there
should be a lot
early.
of new things going on because this is going to be a new group.
Totally. No, totally.
It
You're
should be,
exactly
it should
right.
be really exciting.
And so do you know, I haven't seen the schedule. So I used to get like the full detail schedule from Teresa, on every single committee meeting and all that stuff. So there is sort of an advocacy committee type meeting taking
Yep.
place on Saturday afternoon? There is.
Yeah,
Okay.
yeah, and I want to say it starts at, I don't want to say, I think maybe 2:30, 3:30. I think it's like usually like an hour and a half, 2 hours. I could send it
Yeah.
to you. And
Yes. Yeah, please.
yeah, I figured I'd save you a seat. We
Yeah.
usually sit right in the back and
Yeah. Yeah.
but
No, no, for sure. I'm glad you're reminding me of this because I want to look. It's hard because everybody from Madison, who works in the credit union industry is going to DC that day or the day after. So it might be hard to switch, but I will see if I can get out earlier because I do want to attend that meeting. And see you, of course. And you know, just have a great time. So
yes, yeah.
yeah,
I know, I'm really looking forward to it. I know it's very tiring. I mean, it really is, but you just absorb so much.
that's right.
Yeah,
Yeah.
yeah.
Yeah. Well, Lori Herrick, thank you so much for taking the time. So Lori, President and CEO of Manchester Municipal Federal Credit Union in Manchester, Connecticut. It was great having you on the Credit Union Nation podcast, and we'll see you next time.
Thanks, Tom. It's been a pleasure. Can't wait to see you next week.